how I took the same trade as ICT again. Please read the following disclaimer first. So before moving ahead, I want to answer a question I got on Twitter about which contract month I was using. So I was using ESH2024, which is the current contract month right now, which is E-mini S&P 500. H means March contract, 2024, which is the next year. And the reason I was using that contract, which is exactly as ICT taught, because it is a contract month which has the most volume currently. So to figure out which contract month you should use, the basic procedure to do that is you have to go to barchart.com, click here, a drop down menu will appear, select E-mini S&P 500, and here you will see the future contract months. You have to check which contract month has the most volume, and whichever contract month has the most volume is here. You have to select that contract and use it on TradingView or whatever website you're using. So the ESH2024, which is the March contract for E-mini S&P, has the most volume here, so I traded this contract. So the economic calendar is important because I was using the narrative built by the 8:30 news driver, and 2 p.m. was the FOMC news drivers, which is a heavy impact news driver, but I was not active during this time. I was active at 8:30, after 8:30 to be specific. So at 8:30 we had core PPI numbers, and in the afternoon at after 2 p.m. we had FOMC statements. So this is not the daily chart for the day that the trade was taken. This is the daily chart from one of my previous market reviews. You can click here to watch that market review. You can see the date here. This screenshot of this chart was taken on November 28, 2023, and we were somewhere around here, and I was talking in that market review that my aim is for bullishness. I want to see the consequent encroachment. I had talked about it, and also these two lines, the two golden lines here, this was the volume imbalance, and you will see the two lines in my execution video. So these two lines were on my charts for more than 2 weeks. So you these two lines were not annotated, but you can see the lines, the golden lines and the levels in my execution video, and I'll talk about it more when we review the execution video properly at the end of this video. But this is the daily chart, and let's move on now. This is the daily chart, and was the daily candle of Wednesday, December 13th. This was a big bullish candle in hindsight now. This is a big bullish candle in hindsight now. But when I was trading, when I was active in the marketplace, when that trade was taken, this was not so much of a big candle. We were somewhere around here, around the high of this daily volume imbalance, somewhere around here when I was active in the marketplace. So in hindsight, this looks like a big bullish candle, but it was not that big of a candle when I was active. Again, remember the two golden lines here, which is the daily volume imbalance in the current contract month. The previous chart that you saw was the December contract month, which I was using in my market review because that was the contract month which had the most volume during that time when this market review was made. But this trade was taken in this contract month, which is March 2024, because during that time, during this time, actually this video is being recorded on 15th of December. So during this time, March contract month has the most volume, and it was Wednesday. So I was watching after the 8:30 a.m. news driver, which was PPI numbers, and when I was watching, we were here. This black candle was not there. We were here. Only the green candle was there. I had noted the 1 hour buy side imbalance, sell side inefficiency, which is the 1 hour fair value gap here. In this fair value gap, you will not see it in my execution video because I don't like to mark out a whole big rectangle on the higher time frames and uh, show it on the lower time frames, because then the whole execution video you will see, because it is a 1 minute chart and the execution video, you will see a big green screen then. So that's why I don't mark it. But I was monitoring it on my other monitor. This volume imbalance level, you will see it. This volume imbalance you will see at the end of it. This is the high of the daily volume imbalance. This is the low of the daily volume imbalance. Okay, so this is the 15-minute chart, and you can see we have a classic accumulation, manipulation, distribution pattern here. When I was watching the markets, we were somewhere around here. So we only had accumulation and manipulation. And why I was confident about this move being the manipulation move is because of the news driver, and also the fact that we had been rallying since the whole week. So I was not bearish, but I wanted a quick scalp. I wanted a quick scalp that was short. So accumulation, manipulation, daily volume imbalance, high level, we broke past above it. And why I was confident with this being the manipulation move was because of the news driver. The news, and this is important here, the news driver that came around 8:30 rallied without taking any form of sell side liquidity. So in my mind, I was thinking that okay, even if the market is macro bullish, we have been rallying since a lot of days. And I also wanted to say that I had a question somewhere. Someone asked me a question that what is the difference between high resistance and low resistance liquidity runs? This, there was sell side liquidity pool somewhere around here, the daily sell side liquidity pool. Market moves lower, retracement moves lower, retracement moves lower, retracement moves lower. This is not too much of a high resistance liquidity run, but for in contrast, you can see that moves lower, at least 50% retracement, moves lower, at least 25-50% retracement, whatever, moves lower, reversal. Look how much of deep retracements this bullish run has. Rallies, this much of a retracement. Rallies, no retracement. Rallies, consolidation. Rallies, we had not had, I just murdered my English grammar there, but we did not have much retracements in this bullish run. So the market is heavy bullish. And this is an example, this whole buy side run here is an example of low resistance liquidity run. So I also wanted to mention it. So yeah, after this manipulation move, after the news driver 8:30 came out, we rallied. We had clean equal lows here. We had the 1 hour fair value gap here. So I was thinking that okay, I'm not trying to catch a reversal here, a long-term reversal here, which and if you have seen the charts, we reversed from here and went higher with FOMC, a lot higher than this. So I knew that I don't want a reversal here, but I want a quick scalp to go for sell side liquidity pool. And maybe if we run too much downside, maybe I left one small contract for daily volume imbalance low here, but I knew that we are not going to go there, so I just at around 4700 level I exited that also. This is the execution video, and we will compare it side by side with ICT's execution video. So this is the part that I think most of you are here for. Let's begin. So I entered, as you can see, I entered with one contract and immediately I started recording. One contract because I don't want to miss the move, and one contract is just to, just going, just mark my territory. That's why one contract. So as you can see, I entered again with, I was trying to enter here with a touch on the low of this candle, but because of the spread, And this is a very small range here. As you can see, this is just 1 or 1.5 handle range here. It looks like a big range, but if you see the price levels, this is a very small range. And we have a spread of 0.25, which is a quarter of a handle. So because of the spread, my entry looks a little bit lower. That's why. And I was going in with market orders. But I was mainly entering with the low of this candle and low of this candle and the volume imbalance here. Once more, let's watch it. I entered, I clicked the button when the price touched here, but still I got an entry here because of the spread, or maybe I was late. Then I set a limit order for 6 contracts, which will get me an entry with my normal position sizing according to risk parameters. I got an entry. I marked the volume imbalance here. This is the hourly chart. As you can see, this is the hourly chart, and there's no annotations there because this is the template of execution. I have another template on my other monitor, which is the template for marking and annotations and marking out higher time frame key levels. But on my execution time frame, I just try to annotate the lower time frame charts. So you can see I set my TP here, and when it was rallying here and going for my stop loss, I know it was not going for my stop loss. This is a mohawk in my opinion. The body of the candle opened here, and I was thinking here that if we close above the volume imbalance, that means I'm wrong. But this bit of a mohawk is okay. As you can see, I'm trying to enter 6 more contracts here. I lowered my stop loss here because I wanted to see a swing high form here. I did not want to see this high broken. If this high was broken, that would have meant I was wrong. So I lowered my stop loss here. Entered 6 more contracts. Still, the risk parameter was giving me a lot of room, so I was okay. Entered a few more. I think one more. I said watch it fall now. That means that we have shifted market structure here. It should fall now. And as I said, watch it fall now. You can see the video. I said immediate rebalance and fall. And when I said immediate rebalance and fall, I also entered 5 more contracts here. I first told I'm not taking partials here. I'm going to do a full pull. Full pull meaning I want to see my TP get hit. I'm not taking partials here, but after a while, I changed my mind and I took some partials. And I had already denoted bagged and tagged to show off. Okay, here I set a first. I accidentally, you know, set a buy order here, buy limit order with or buy stop order, whatever. Cancelled it and then set a sell limit order, which is again a pyramid entry more. I wanted to pyramid more here, but it touched it, but because of the spread, I did not get an entry. I wrote here I wanted to pyramid more here. Anyways, it's going without me with more pyramids. So when we had this candle close and this candle open, we had a volume imbalance here. Now I was thinking that we have an inversion fair value gap here. We have a volume imbalance here. So I was thinking that this candle will open, touch the volume imbalance, and move lower. That's why I had a sell limit order here, which is basically another pyramid entry. Then I was thinking maybe I should set my pyramid entry with the the low of the volume imbalance, not the high of the volume imbalance. Then I tried to move it. It didn't work out. I did not get an entry. here, and I want to say one more thing. I'm not. This video was had a banger of music. So ICT comes in with chorus. So I will recommend you to watch this video on this video separately because it had copyright strike because of the music. I'm not playing the music here because I don't want this video to get a copyright strike. That video was awesome in my opinion. So if you want to watch that video separately, you can click above. So ICT comes in here with NQ, and he is also aiming for sell side liquidity pools here. I'm trading ES because I wanted to trade ES because NQ I did not have a clear high time frame any arrays that I was confident with. So I had this daily volume balance, and this was the daily volume balance that I was talking about. Look at this golden line here. This was the daily volume balance level. So also I forgot to mention this, but I was waiting for price to break the volume balance level here, and then I got my first entry. I was waiting for price to shift. So ICT was denoting the inversion fair value gap here, and I got an entry before ICT with this shift in market structure and change in the state of delivery here. But ICT was trading NQ, and ICT also wanted to go for sell side liquidity pool below these lows. I closed the pyramid int. I changed my mind and I did not take another pyramid. ICT got in with the order block and inversion fair value gap here. I took a partial here, and I'll be honest, there was no logic behind me taking a partial here, just that I was a little bit nervous about the trade idea because you know it happens. I sometimes get nervous. So I just take a partial whenever I feel nervous. A small partial, which is a 5 contract partial based on a 25 contract position size. ICT got in with the order block and inversion fair value gap. And if I had let my sell limit order run, this would have gotten me another pyramid entry. And then, as I said, watch it fall now. I'm risk free, my stop loss is at break even. And now both of our charts will see big black candles with a very nice music. So please watch that video. I want if this video is boring, please watch that video. I was taking partials and see how random it is that both of us got the same trade. Again, I wrote here bagged and tagged, and here I write I'm going to try to go for some deeper discount objectives, which basically means that I want the sell side liquidity pool is here, but market sometimes spikes and below the sell side liquidity pool very fast. So I was hoping that I could catch that spike, and also remember the 1 hour fair value gap. Remember that. I was hoping that I could, go for the Kotsuka encroachment of that 1 hour fair value gap, maybe even the low of that 1 hour fair value gap. So these were the deeper discount objectives that I was aiming for. But still, as it was declining, I was taking 5-5 contract partials because partials pay. Bagged and tagged, already denoted to show off. Moving my stop loss a little bit more. Again, bagged and tagged the buy limit order. Here NQ had a very sharp rejection after taking out sell side liquidity pool, and that's why I was not comfortable with NQ, even though it had large ranges, because NQ is typically the wilder pair. Yes, but ES was weaker in my opinion. That's why I traded ES. ICT got stopped out on his trailing stop loss here. I did not get stopped out. I closed it manually later. I had only one contract here. You see, I had only one contract left after taking a lot of partials below the liquidity pools here. I had left one contract for what? For this golden line. And what was this golden line? It was the low of the daily volume imbalance. I was aiming for this. I did not get this. I had to close the one contract later, somewhere around here. But I was aiming, maybe if the one contract runs and the market goes bearish for the day, this would have been my target, but just for one contract. Because the market was not typically bearish on the higher time frames, it was heavily bullish. That's why this was a quick scalp. I closed, like, out of 25 contracts, I closed 24 and just left one contract if it goes wild. And then the trade results. This is how I took the same trade as ICT. Again, it has been 4 times now. So yeah, if you have any more doubts and questions, and you want to book a private one-on-one sessions with me, you can sign up here. Click on the link in description, linktr.ee/traderz, and you can sign up here. Thank you for watching.